Let no feelings of discouragement prey upon you, and in the end you are sure to succeed. Abraham Lincoln. Again, another one of those teachings on perseverance. The most lacking of human traits and the one that guarantees success. 10 to 15 minutes a day, my friends, that is all we ask here. As we wrap up this week with the weekly review and forecast, if you want to supercharge your training, of course, be filling out your weekly market worksheet. It's in your show notes every day. If you're not a subscriber, go to chartingwealth.com, sign up for free. Patreon members, hope that you found a couple of potential practice trades that you may have jumped into this afternoon after receiving your 20 weekly vertical crossovers last night. Remember, Patreon members, everything we send to you, in case you have any trouble with the email, always check our Patreon page. We upload everything there too for Patreons only. Let's jump into these charts. We see stocks are up, bonds, gold down, Bitcoin up, if you can call it that, 0.03%. So again, still heading down, but let's zero in on these charts and see what we see. Now, we have had in the red for, oh gosh, many weeks now, since the week ending the 3rd of December, SPY. Now, stocks managed to plug along sideways all the way until the week ending the 23rd of December, then popped up that last week in December, and then have been devolving since then. We have a down week, big red spinning top. Wick on top, not as high as the wick on the bottom. Price percent oscillator slowly pulling away from the red signal line. Derivative oscillator gaining downward momentum. So overall, that big wave, down sentiment up a little bit for the day, 0.04, 0.4%. What do we see on the latest 2-day candle now? The prior one was a green spinning top. That was the Wednesday, Thursday. This is just the Friday, so it will finish drawing on Monday. What do we see going on? Price below the 2-day trend line, price percent oscillator, derivative oscillator heading down. We haven't hit the low that we hit back on Tuesday, the Monday-Tuesday candle, but again, things slid sideways Wednesday, Thursday, and then Friday resumed. We see, as far as red down candle movement goes, like I said, what we're looking at on the 2-day is the Heikin Ashi candlesticks. Heikin Ashi are different than your typical high, low, open, close. They're measured differently. They help us see average pace. That's what we're looking for. So we see in the average pace with the candlestick and the price percent oscillator and the derivative oscillator, continued down push in price. What's happening on the half day? Down in the morning, recovered some in the afternoon. Price percent oscillator flattening, derivative oscillator going red in the afternoon. So again, we will just continue to push. We'll continue to watch as this market pushes down and just see how low it will go. Are we done? Is this just inexorable? Are we heading toward a bear market? I don't know that. You look at this chart, you can see where we've gone up, gone down, gone up, gone down, gone up, gone down, gone up, gone down, gone up, gone sideways, and then this latest little burp. Is that it? Don't know. But as far as what we're seeing right now, we're negative on the weekly, negative on the 2-day. Let's move on to the Nasdaq 100, which has been more negative. These are the tech stocks, more negative than the overall S&P 500. Big red down candle for the week. Price percent oscillator pulling away, and the derivative oscillator gaining downward momentum. 2-day, haven't reached the low that we saw on the Monday-Tuesday candle earlier in the week, but we got a red down candle there. Price percent oscillator heading down. Derivative oscillator gaining downward momentum. Down in the morning, a little bit of recovery in the afternoon. Derivative oscillator is still positive. Price percent oscillator negative, a little more than flat, but still negative. So again, overall, when we look at stocks, we again see lots of pushing down, particularly in the tech sector. Now, let's move on from stocks to 20-year U.S. government bonds, down 1.51%. Of course, we had that weekly vertical crossover this last week, and we just see things moving on down. The low for last week, 141.56. The low for this week, 141.36. So not hitting a huge, a real substantially lower low, but that candle moving down. Derivative oscillator gaining downward momentum. Price percent oscillator still strongly down on the 2-day. That's where we can see where that sideways slide is and sort of trying to resume after a slowdown and then an up movement and then the end of the week trying to move back down again. Price percent oscillator heading down. Derivative oscillator, which is our leading indicator, a triple smooth version of the relative strength index, is losing downward momentum but still in the red. Look at this half-day chart. You can see where things bottomed there on Monday the 10th and then started moving up and then sideways, up a little more on Thursday afternoon and then down on Friday. So again, we have that weekly vertical crossover in effect. That 2-day is also heading down. So in bonds also, lots of downward pressure. Now, historically, what usually happens when stocks aren't doing well? Money flows over to bonds. Well, if you're having a deleveraging, everything moves down together. Markets can go into panic. People can have margin calls. There can be blood in the streets. There's not that yet as far as blood goes. But as we watch the market continue to struggle to keep these highs, again, we might start witnessing some significant deleveraging. And as we see stocks moving down along with bonds, again, we'll keep an eye on that. What about gold? Gold down for the day, it's hard for me to read it here, 0.29%. We see gold after 2 weeks of up movement. We've now had 2 weeks of just sideways sliding. A doji last week, red one, a doji pretty much again this week, but that price percent oscillator trying to head up, derivative oscillator, looks like it's gone. It was green, then red, then green, then red, then I don't know what it is now. I can't even see it on my chart. They just sort of disappeared. So lots of indecision on the weekly chart. We're still in a confirmed up move. We look at the 2-day, excuse me, and we see where the 2-day bottomed last Friday and then moved up for 4 days, slowing down on Friday. So again, still trying to move up. We look at the half day, and that's where we see we had 2.5 days of nice green up candles and then sort of devolving after that, starting in the morning on Thursday and then through Friday. So again, our weekly and 2-day are still in confirmed up moves, but they're weak. So we'll see if gold is going to maybe over the course of this next week get a little grounding and then push on through for us. I want to see gold take off. You guys know how much I like gold. That's where we are in our big four. Lastly, we go into the crypto world in Bitcoin. Now, this is the New York Stock Exchange Bitcoin Index. It is different than you might see at some of the different crypto exchanges that are out there. I typically look at Kraken. In fact, I've been looking at Kraken a lot lately. They have some charts there that I have really been working on for our Patreon members to be able to start charting the top 10 cryptocurrencies. They actually, on their advanced charts, have a price percent oscillator and Heikin-Ashi candlesticks, all of which I really like. They don't have a derivative oscillator, but I can work with what I've got there. So for you Patreon members, stand by as we continue to keep moving into this crypto world. But what do we have overall as we look at these charts on a Friday? Check it out. Just continued down movement. There is no jumping into the crypto world at this time. It just continues, as far as Bitcoin does, to go down. You want to check out the Bitcoin grayscale? Down. You want to check out Ethereum? Down. You want to check out the Bitcoin futures, BITO, BTF, and XBTF? These are all new crypto Bitcoin futures ETFs, short term, down. What about The crypto world overall, the top 10 crypto index fund weighted by market capitalization, down, 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 down. So what are we waiting for? We're waiting for a bottom to be reached. Price percent oscillator is about flat right now. I'm sorry, derivative oscillator is about flat. Price percent oscillator heading down. We look at the 2-day. That's where our price percent oscillator is flat. We see a sideways slide right now. Have we reached a bottom? Well, we could have thought that all the way back in late November. And then boom, down again. And then it slid sideways up for a couple of weeks. And then boom, down again. So no, not until we have a weekly vertical crossover. When we had a weekly vertical crossover last, remember that? That was back in, oh, wait a minute. Let's see. I'm in the 2-day. I'll show you the weekly vertical crossovers. We had the latest one back, here we go, on the 13th of August. And of course, we had things hammer up until we had that 2-day crossover going down that would have taken us out of that, not have us ride those other 2 weeks of down movement. Then would have jumped back in at that 2-day recross going up, and then would have gotten out with that 2-day crossover going down and not done this big ride down lately. That's what you get when you know how to read a stock chart. That's what that does for you. We've kept this on here so you guys can see it. So what do we want to do? We want to wait until Bitcoin starts going up and we have a weekly vertical crossover confirmation that there's enough greed versus fear, or enough, we'll call it exuberance. Greed sounds bad. I'm not going to pull a Gordon Gekko on you. But where we have enough exuberance to show it in the charts with a weekly vertical crossover on the weekly. And when that occurs, then yes, we will be looking to jump into a practice trade on Bitcoin. And I use those words, practice trades, because we're not a stock calling service, not a Bitcoin calling service, not a cryptocurrency or gold or bond calling service. We're an education firm. I want you to practice with us. Get good. It doesn't cost anything to practice. Otherwise, you can just go out there and gamble if you want. And what happens to hogs? They get slaughtered. Dumb people don't last very long in this world. So we look at the 2-day. What do we see on the half-day? That is where we see where things have bottomed and are moving up right now. They moved up for a few days. They're really moving sideways right now. And we'll see where things go from here. But right now, we're just in limbo. And you know what? That's okay, because you're not losing anything. First rule of trading, don't lose money. Second rule of trading, make money. But if you lose money, you won't last very long. That's where we are, folks, as we end the day. Patreon members, God bless you. Thank you for all your support. If you care about what we do here at Charting Wealth and you get a lot from us, then how about a little reciprocity, a little good karma coming our way? It'll come right back at you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. And remember, in this life, you can't give anything away. Ponder that.